Most businesses overpay on corporation tax. But why? Because when you try and Google the answers to your tax questions, you're met with pages and pages of overcomplicated, poorly organized information that, unless you have an accounting and tax qualification, is impossible to understand. In fact, the tax code is 21,000 pages long. That's 12 times the length of the Bible. That's 10 times longer than the entire works of Shakespeare. So rather than expecting you to sit 15 exams and spend the next 9 years reading the tax code, I'm going to explain the top 10 tax write-offs available to small business owners. First up, there's bad debt. If you're owed money from a customer and you believe that they genuinely can't pay, that bad debt is tax deductible. You can essentially write off the value of the outstanding balance to reduce your income, which in turn will reduce your tax bill. Now, it's worth noting that you can't just write off invoices because you feel like it, or create general provisions just in case when someone doesn't pay. There has to be some real reasons why the debt is irrecoverable. Number 2, it's accounting and professional fees. For most businesses, this is a big one. It's a cost which is incurred wholly and exclusively for the purpose of the business, which means it will be tax deductible. That normally includes your accounting fees for preparing the accounts, tax advisor fees for preparing your corporation tax return, solicitor fees for things like rent reviews or trade disputes. However, if you received any fines or penalties, these would not qualify for any tax relief. Those are capital in nature and therefore are not deductible. Number 3, there's travel expenses. Travel to meet customers or suppliers is allowable. Travel to networking events, travel to co-working areas that is not your normal place of work, all allowable. That includes travel even if you've driven in your personal car, accommodation, food and subsistence, if you had to buy food and drink while you're away because you were not at your normal place of work. The key rule is that it must be wholly and exclusively for the purpose of business. You obviously can't tag a business meeting onto a holiday and then claim the full lot. You would need to calculate the personal element of the work in relation to the personal benefit for that trip. Also, a little tip for you. If you use your car for work, reclaim your mileage at 45p per mile for the first 10,000 miles instead of against receipts. This will work out more tax efficient for you. Just note that when you do claim your travel, it can't be to and from one place of work. It needs to be to other locations outside of your main office, for example. Number 4 is bank charges and interest. Bank charges are deductible. That includes your monthly bank fees, your overdraft fees, your credit card charges, your loan interest, card processing fees. These are commonly missed and these can add up to significant tax savings. One tip for you, if you're using a payment processor like Stripe, PayPal, Go Cardless or similar, log into your portal and you should be able to run a report for all your card fees. And you can cross-reference what you have and haven't claimed to make sure you get the full tax relief. Number 5, we have staff entertaining. Staff entertainment is deductible, including things like a Christmas party, if you had one last month, and the rules are simple. It has to be open to all staff. It must cost no more than £150 per head, and it can't be for any clients or suppliers. If you go over the £150 per head, the full amount is disallowable. So make sure it is £150 per head or less and not 151. If your business is just you and your spouse, for example, you can both enjoy this benefit. You can both go out for a meal, a combined cost of up to £300, and claim the full tax relief through your business. Number 6 is pension contributions. Pensions are one of the most tax efficient things you can do as a limited company director. Your company can pay into your pension and that contribution is tax deductible from your corporation tax bill. The current allowance is up to £60,000 per year, and employer contributions for employees are also deductible. Now just be aware, you couldn't just employ your children and dump a huge amount into their pension contribution. It has to be justifiable. So just be aware that HMRC could challenge this, but if they are working for the business, then your accountant should help you to know where to draw the line on these contributions. Number 7, it's salaries and national insurance. Salaries are usually the biggest cost in any business. Your salary and your employee salaries are of course fully tax deductible, but so is the national insurance too. A lot of small companies employ family members. That's fine, as long as they're doing a genuine job for the business. If they don't earn money elsewhere, you can also use their personal allowance of £12,570, meaning little or no income tax for them personally, while the salary would still be deductible for the company. Now, there are lots of reasons you could employ someone in your business and also potentially employ your spouse in a business. Just make sure you can justify it to HMRC. Number 8 is professional subscriptions. If you need to be a member of a professional body to do your job, that fee is deductible. Accountants, lawyers, doctors, architects, this applies to loads of professions. If you're unsure, HMRC actually has an approved list of approved providers on the government website. As well as professional subscriptions, you may also have training costs. Training costs are deductible if they improve or maintain skills needed in your existing business. If you're a hairdresser, courses for improving cutting or colouring techniques are fine. If your training has to relate to what you are already doing, now bear in mind, the training has to be in relation to something you're already doing. It can't be for starting a completely new trade. And number 10 is capital expenditure and capital allowances. Capital items don't usually get deducted as a normal expense. Instead, you get capital allowances. The big one is known as the annual investment allowance, which lets you deduct up to £1 million of qualifying assets in the year you buy them. So if you buy a £1,000 laptop, you can usually deduct the full £1,000 to reduce your taxable profits. And a lot of people miss this. Now then, there are probably another 50 tax reliefs I could run through, and even more tax strategies that I could use, including group reliefs, alphabet shares, you name it, there's loads. So if you feel like your current accountant is a little bit too reactive rather than proactive and you'd like to book a call in with me directly, I put my email address in the description below. If you email me your current situation and what you would like to discuss, I will then send you a link to book in a call with me. We'll pick a time which is best suited for you and take it from there. Or for more weekly tax saving tips, press on the subscribe button and then I can see you in the next video.